So let's, first of all, John Robertson, just to get to, has this been priced to sell?
I think the fact that it's met the sort of market consensus view on value suggests that it's been priced to at least provide a reasonably strong secondary market. The fact that all the indications are that it's been well and truly oversubscribed would tend to lend support to that view.
All right. Well, why do an IPO now, just as we've seen a correction with commodities markets? I guess people will take a longer view here, yeah?
Absolutely. I mean, an IPO has a long gestation period, and in this particular instance, I think the beginnings of it can be traced back to the end of 2009, when Glencore issued a bit over $2.2 billion worth of convertibles. And it was understood at that time that this would lead ultimately to an IPO. And of course, in the 18 months that have since transpired, we've seen that develop, and now we've reached the end point of that process.
Let's also just talk a little bit about some of the accusations out there that the Glencore executives are cashing out here around the market peak. What's your view on that?
No, I don't think they're supported by the arrangements that are in place. There are escrow provisions for senior executives in the company. There is, of course, some sell-down opportunity for those executives. I think some 2.2 billion or thereabouts of the offering is in that category rather than new stock. But no, I think the provisions that are in place would suggest that this is just part of a normal IPO structure.
Right. Okay. It's a very difficult company, though, to value because, I mean, it's at the same time it's a trader. So, when people correlate it with the price of commodities, it's a bit of a misnomer because they're going to make money even if we've got a flat or a down or an up market.
Indeed, indeed. I mean, I think the way to look at Glencore is that it's got three legs to it. I mean, the trading arm is probably a bit over a third of its total business. It has its own direct operating activities, most particularly in coal, and of course it has its investments through its position in Xstrata, Minara in Australia, Rusal in Russia. So it's more than just a trading company.
But you mentioned Xstrata there, is a merger with Xstrata something which would be the next step in your view?
I think it would be a logical step. I mean, if one looks at the current situation, Glencore have something over $20 billion invested in what really is a passive investment. It would obviously make sense to crystallise that value in some way or other. The other aspect is, of course, that both Xstrata and Glencore have ambitions to grow, and inevitably they will clash with each other under the current arrangements because they'll be chasing the same sort of opportunities out there. So I think resolving that would make sense for both parties.
Let's talk about commodities as a whole and the commodities complex. Where do we go next? We've seen a bit of a pullback take place, a gut check some are calling it. Does the rally continue for the rest of the year now?
Yes, I think it's important to sort of separate out the two aspects that are part of the commodity pricing spectrum. The first is, I think, to look at the longer-term underlying supply-demand fundamentals, and they remain very supportive of ongoing growth in the commodity sector. Then, of course, on top of that, you have the more speculative elements in the commodity market. You have ETFs and exchange-traded commodities. And a lot of hedge fund activity in this space, that naturally leads to price volatility. But as I say, I think people that are looking to make investments in the Glencores of this world will be doing so with a view to the longer term fundamentals in the market rather than short term volatility.
Thanks very much indeed for that, John Robertson. Thanks so much for joining us from Melbourne there.